So there is question 30.1 graded questions. So the question sizoqala ngayo, and it's not like senza le question but kunezinto kunama principles abanye ngifuna so establish through ukwenza this activity. So ngizokutshela mase si establish those principles. So here we've got two companies, Pelican Limited and Seal Limited. So Pelican and Seal. So the parent and the subsidiary. So Pelican Limited purchased all the shares in Seal Limited on 1 July 20x3. So angimeke lapho ngichaze lento engifuna ukuyichaza la. So la siyabona ukuthi okay, the parent into yokuqala umuntu nama groups kumele ukhona identify ukuthi who is the acquirer, who is the parent, who is the subsidiary. So ubani othengile ama shares la ewathenga komunye. So Pelican is the one who purchased all the shares in Seal Limited. So Pelican ngoba uyena o acquirishayo. So Pelican is the acquirer. So uyena oyi parent. So Pelican is the parent of Seal Limited. Now once okay, khona enye topic esizoyenza emva kwale topic esibiza ngama associates, because siba nama groups whereby there is a parent and subsidiaries. Then siphinde sibe nenye topic I think sizolandela ngayo la ngoba nayifola ngaphansi kuka business combination yona esibiza ngama associates. So kumele sikhona ukuhlukanisa lezo zinto zoyi2. Now if City Pelican purchased ama shares, so usho ukuthi uyi-acquirer, uyi-investor, use parent, u-owner ingxenye ethile ka Seal Limited, kumele sazi ukuthi i-ownership percentage yabo ithi ba-owner how much of Seal Limited. So kuna le formula ke siyisebenzise ucalculator the percentage ownership. Percentage ownership. So must calculate percentage ownership sifike sithini shares acquired by parent divide or total number of shares in issue. So total number of shares in issue by a subsidiary company. Ukungamlela lapha ya ngenxa space. And ekugcineni simultiply ngo100 because isifuna ipercentage la. So le formula iyona esisebenzisayo ukudetermine the ownership percentage. So mhlambe uma senze example asike sithi uP Limited uthenge ama shares ay 3000. So let's just assume ukuthi they acquired 3000 shares. So they acquired 3000 shares out of, then ama shares are in issue. The total number of shares in issue by your subsidiary, but ama shares are in issue of 5,000. So now you take the number of shares acquired, then divide by the number of shares in issue by your subsidiary, then you multiply by 100. Then lokho kuzosinikeza u60%. So if it's in a case, kusho ukuthi uparent uowner 60% of usubsidiary. So lo 60% yona sobiza ownership noma nge-interest or control rate. So that is 60%. Now umbuzo ke uthi what about 40% abangawu own? Ubelongaphi lo 40% lo? So kusho ukuthi if uparent owner 60% usubsidiary, another portion of 40% is owned by other people esingahlangene nabo. So those people is referred bona as what? As non-controlling interest. That is NCI. So if the parent owns 60%, the remaining portion owned abanye abantu esingabazi, leyo portion says to non-controlling interest. So that is non-NCI. So if we company yethu, uparent owner 80%, kusho ukuthi NCI will be owning how ubani uzobe owner 20%. So 20% uzobe belong at NCI. Now kule situation noma kule scenario siyenzayo labathi Pelican Limited purchased all the shares in Seal Limited. So la kusho ukuthi uma kuthiwa bathenga wonke ama shares, ukuthi if Seal Limited enama shares are in issue of 5,000, onke lama shares are in issue acquirishwe uparent. So once kwathiwa uparent uacquirishe all shares, kusho ukuthi that parent is owning that company in full 100%. So kusho ukuthi ngamanye amazwi Seal Limited is wholly owned by Pelican because they acquired all shares. So kusho ukuthi lana we do not have a case la NCI. So there is nothing that is owned by other people because the company UC Limited is wholly owned by Pelican Limited. Why City C Limited is wholly owned by Pelican? Because Pelican purchased all the shares in issue by UC Limited. Samsung. Are you still there? All right. So I see Kubegeni. And good night, when I think about associate and with us early, this is fairly topic already. So any guys that made sense, if no man is an example. So let's say A Limited. So this is an example. A Limited acquired 45% interest in B Limited. So A Limited utenge 45% of ama-shares that B Limited. Then umbuzo ke ngobuzayo engizofisa si-discuss le sizoyixoxa. So ubani oyi-parent between A, ubani oyi-subsidiary between A and B, ubani oyi-subsidiary between A and B. So ngizocela ningipha i-answer yalapho. So A acquired interest ka 45% who B Limited. Then my question is, who is the parent, who is the subsidiary between the two companies?
A, the parent.
So A, we parent because we 45%. Okay, thank you. So can it is vumelana nalokho, so I will assume ukuthi sonke sivumelana nalokho. But now unento engizochazela yona ke ukuthi for i-company ukuze si-regard as i-parent, that company must own at least 51% ku-subsidiary. So njengamanje kule case esinayo la u-A Limited is owning less than 50% of u-B Limited. So yes, u-A kunengxenye ayi-ownayo ku-B Limited, but ngenxa yokuthi le ngxenye ayi-ownayo i-less than 51%, we cannot say ukuthi u-A useyi-parent ka-B Limited. You know, a company will become a parent if the company majority shareholder ku-subsidiary. So if u-A Limited own 45%, if they own portion less than 51%, local will create a these are business associates. So there are no parent and subsidiary relationship here. So you know, so the parent and subsidiary relationship if one company is owning more than 50% of the subsidiary. So labas babiza ukuthi bangama business associates. Business associates. Of which a topic esizoyanayo in detail after in topic camera groups. Now it's all in short.
Yeah, it's what I mean.
Okay, so I'm a parent company. Once what we company parent was what your company is owning more than 50% of subsidiary. So you cannot have a parent company owner less than 50% or 51%. So that company whose parent must be a majority shareholder. So because anything you to send even a control, you cannot have total control if you are owning less portion in the company. Obviously, if you have if you are a majority shareholder, you have control and power. Because even other shareholders vote against whether you will still win because of the power you hold as a majority shareholder. So okay, but this is all see vakashela lezi zinto lezi. So now sesiyazi la ukuthi okay, Pelican Limited purchased 100%, they own 100%. So there's no portion that is owned by outside persons. So there's no NCI here. And then there is that date okumhlaka 1 July 2023. So layer date lesibiza ngani nge-acquisition date, i-date abathenge ngayo. So this is the date of acquisition. Isibaleki every time udila nama groups kumele wazi i-acquisition date yakho ukuthi ingumhlaka ba. So le company itheng uC Limited kuthengwa ama-shares kuyena ethengwa Pelican ngomhlaka 1 July 2023. So kusho ukuthi that date is the acquisition date. And kumele establisheke la ukuthi at that date, at that acquisition date, uC Limited ubewetha how much and uPelican wamkhokhela how much, so that sizobona ukuthi sinayo yini i-goodwill noma sinele esibiza nge-bargain purchase. So ngizokhombisa ama-calculation esiwenzayo ukudetermine the goodwill or the bargain purchase. So lapho siyayisenza into esibiza nge-analysis of i-equity ka-subsidiary. So ila isikhona ukuthola whether sine goodwill noma sine bargain purchase. So asiqhubeke sifunde information yethu la bese siya kuleyo calculation yo goodwill. Ngikhombisa ukuthi how do we go about calculator the goodwill. So the following are the statements of financial position as at 30 June 2024, as well as the statement of the comprehensive income and the statement of changes in equity of the two companies for the year ended 30 June 20x4. So these are financial statements. So consolidate. Obviously, any questions of the city, consolidate this financial statement. So this is the balance sheet. See, the balance sheet is nama assets, non-current assets, and then we are all upon notice the investment in still limited 120. So we should 120. Upelican was acquire share work shares. Was acquire share work shares. Issue still limited. Okay, 120. Now, we analyze it. Si compute the net asset value or we value show ukuthi kahle kahle limited to be worth how much sibone ukuthi le price bayikhokhile was it a fair price or kube khona ibagain purchase. Then sine loan to still limited again uPelican uphinde walona u10,000 angithi yabona 10,000 usithi ungaphathi kwama assets because if ulona i-loan kusayi investment if uwena olona so guys i-loan asiyeke lento yokuthi uma kukhulunywa nge-loan vele ucabanga ukuthi isikweleti i-loan. I-loan iyaba i-asset iyaba investment if kuwuwe onikeza i-loan omunye umuntu. So because ngithama umloan imali lo muntu useyakweleta so kuzomela akhokhela imali yakhe sihambisana nenzalo. So inzalo i-return on investment. So the time you loan someone you have invested your money lo muntu omlonile. So umuntu oba i-loan eba liability kuyena ilo obolekwayo. So in this case angisho yabona kuma liabilities. Nangi non-current liabilities kuno loan from Pelican. So lo be receive a loan from Pelican so i-liability again. So usil is owing a loan ka 10,000 ku Pelican and uPelican uinveste i-loan ka 10,000 kusil. Sesiyazi ukuthi sikhulume ngama intra-group transactions. Obvious lo 10,000 usuka ku Pelican uza kusil must be eliminated because these two companies they formed a group. So all the transactions enzakala between the companies are we group. Those transactions we said must be what? Must be eliminated. So says okay, we're gonna eliminate this 10,000 because imali move from one company and one company, which is imali say within the isa rotator within the the group. So I call as book as outflow or inflow because imali shifty position from when you company. But this company now comes to in the context of a group, which imali I pumanga outside or imali ivelanga outside. So that is why the 10,000 loan must be eliminated. There is no inventory, account payables, and whatever. There is even a share capital for both companies. So uPelican amashares akhe our issue ishile aswazi mangaki. But esikwaziyo ukuthi icapital abayirezile ngokudayisa amashares abawadaisile barezi capital ka 200,000 and uPelican ureze icapital ka 100,000. So we do not know ukuthi mangaki amashares usil this is usil limited awadayisile but esikwaziyo icapital ebe raised kube capital ka 100,000. Then it's no retained earnings at the end of the year. Then see when the statement of comprehensive income statements now for both companies. Profit for the year, Pelican, gross profit, Pelican 80,000, unili ngala, rent income 22,000, interest on loan to seal 500, na ngiyafuthi lo 500 lapha. So we interest on loan from Pelican, lapha no interest on loan to seal limited. So ngiyakhumbula ukuthi loan kumele si eliminate of which nama interest are associated in a loan because loan interest low usil ukhokha interest ukhokhela uPelican. So Pelican will receive interest from usil. So these companies are we group yodwa. All transactions enzakala within the group must be what? Eliminated. So nalabo 500 this is over eliminator uma sesenza ama pro forma journal entries. Then all other expenses, property sibe no selling and administration expenses, sibe no rent expense. So rent expense paid to seal. So uPelican ukhokhe i-rent ka 15,000 eyikhokhela usil. So ushuthi ngoba usil nje lapha eno rent income ka 22,000. Included in that 22,000 is 15,000 uqhamuka from Pelican. So because 15,000 uqhamuka from Pelican, that must be eliminated. All the transactions enzakala within the group must be eliminated. Once you have a principle, you will always get this right. Okay, the answer is a total profit for the year, no total comprehensive income back on. And then Masnigers again the statement of changes in equity. So this is the changes in equity statement. So we call them retained earnings for both companies, Pelican, usil limited ngala. So ibalance le ngomhla 1 July 20x3. Guys, khumbula ukuthi umhla 1 July 20x3 iyona acquisition date leya. So kumele signote lokho. So this is the acquisition date. So uthi uqala nje unyaka yabe yenza i-transaction yokuthi uPelican ayothenga ama-shares from usil. So at that date, beginning of the year or its acquisition date, who retained earnings, the balance retained earnings for Pelican 40, sibe nama-total comprehensive income, ama-profit wabo lawa abawenzile, then bese sithola ama-closing balance. All right. Then the land is not depreciated. All the assets of SEAL Limited are considered to be fairly valued. The corporate tax rate is 28%. Required. Prepare the consolidated statement of comprehensive income and statement of changes in equity for the year ended 30 June 2024, and the consolidated statement of financial position at that date. So what I said, I'm a consolidated statements are three: consolidated income statement, consolidated statement of changes, consolidated balance sheet. So guys, before ukhone ukwenza ama-statements akho, consolidate ama-statements wakho, kumele uqale wenze i-analysis bese wenza nama-proforma journal entries. If unakhuza ulandelela ama-steps, ngeke uze ungayenzi ngendlela efanele. So ngicela ukubhalela la ama-steps lawo walandelayo. So before you consolidate ama-steps, you consolidate your annual financial statement. Step one, prepare your analysis. Step two, prepare pro forma journal entries. And then step three, begin to consolidate your statement. So guys, kumele silandele lama steps ayi-3, and once siwalandela kahle lama steps, sizothi sifika ku-step 3, ama-statements wethu azobe eyisholo wona ukuthi ayilento ngempela ekumele abe yiwona. But once wamisa these steps, uzogcina udlala i-guesswork, and uma ungayisethanga kahle i-structure sakho, uzogcina usugesa, uhambe uthatha amabhalansi uwafaka la ngangena ikhona. So kumele ube uyenze ngale logic engikutshela ngayo. So if uyenza kanje, I promise you uzoy-enjoya lento esizoyenza la, even ithiwa unikezwe i-case yama-group complex, but if you stick kuma-steps, you will get it right. So asiqaleni le question esiyenzayo, kumele siqale senze i-analysis. So siyenza kanjani-ke i-analysis? Ngizoyidweba, ngicela ukuyidweba kuleli page elisha. So uma senza i-analysis, this is the analysis. I think siyayikhumbula from FA3, sasiyenza analysis of equity. So this is the analysis of equity of SEAL Limited. So analysis, guys, is the subsidiary company. So subsidiary company is the analysis. Zonke izinto engena kwi-analysis, ama-balances, onke ama-balances owana kule analysis, ama-balances a-container i-subsidiary. So ayikho into ye-parent noma ayikho i-balance uzoyithatha from u-parent uzoyifaka kwi-analysis. So this is the analysis of equity ka-SEAL Limited. So yonke into oyifaka kule analysis into edila no subsidiary, not to parent. So we should focus here to the analysis ikubani iku-subsidiary. So if when the analysis uzovula ama-columns again, so soba ne-column yokuqala at acquisition. So at acquisition. So this is the first column. And then column elandelayo kuzoba i-column yama-total wama-figures, so besifaka ama-total zawo la. Then i-column yesithathu sino Pelican or i-parent, so Pelican Limited, and in this case we know to Pelican they acquired the all shares, so they own 100%. And then ngaphansi kuka-parent sizoba nama-column ayi-2, i-column ka-at acquisition kube ne-column ka-since. So ngizokuchazela khona manje ukuthi lobo at no since basho ukuthini. And then the last column esinayo kwi-analysis i-column ka-NCI, non-controlling interest. Officially le question siyazi ukuthi asinaye u-non-controlling interest because yonke ownership ingaphansi kuka-Pelican, parent. Okay, so this is how you draft your table ozoyisebenzisa for i-analysis. Then bese siyabuya-ke la ekuqaleni. Lana sithi at acquisition. So guys, into yokuqala noma i-reason ebalekile ukuthi senze analysis ukuthola ukuthi u-sale limited ubekade ewetha how much the time bem-acquire-ish. So why ibalekile ukuthi sazi ukuthi le company acquire-ish ama-shares wayo ibiwetha how much. Sifuna ukwazi ukuthi the reason sifuna ukwazi leyo price leyo value ukuthi bewetha how much. It's because sifuna ukukhathalisa nemali ekhokhiwe bese siyabona ukuthi sine goodwill noma sine bargain purchase. And guys, siyayazi i-accounting equation. Accounting equation ithi assets is equals to equity plus liabilities. So siyazi ukuthi ama-assets, these are resources controlled or owned by the entity. Ama-liabilities, these are debt. Then i-owner's equity iyini yona. So i-owner's equity kusuke kuyi-value i-company ewetha yona. So kusho ukuthi if ufuna ukwazi i-value ye-entity, if ufuna ukwazi i-value ye-company ukuthi leyo company wetha how much, i-focus yakho iba kwini? Iba kwi-equity. So ukuze wazi ukuthi i-company wetha how much, you focus kwini? Kwi-equity. So nala kwi-analysis sifuna ukwazi ukuthi this company izi-acquisition nje ibithini i-value yayo, ibiwetha how much, lokho sikubiza ngo-net asset value. Ibikade ithini leyo value leyo. So ukuze siyithole sizo-prepare i-analysis. So i-analysis yethu kuzomela ifocus kwini? Kuma-equity a-subsidiary because sifuna ukuthola i-value yala ukuthi le company ibiwetha how much. And ukuze sazi ukuthi ibiwetha how much, sizotshelwa eziwe la. Equity yakhiwa yini? Yakhiwa u-share capital kanye no-retained income. So nangu u-share capital, nangu retained income. But i-analysis ukhumbula ukuthi i-focus yethu ikubani? Iku-subsidiary. Now sizo-check-a ukuthi at acquisition date yethu sesiyazi ukuthi bekumhla ka-1 July buka ngokwe-equity yayo. So siyeqala ke-analysis yethu. So ngaphansi kuka-at acquisition sizoba no-share capital because sisebenzisa ama-equity account ukudetermine i-value ye-entity. So sizoba no-share la. So sizoba no-share capital. So i-share capital yethu ka-subsidiary iwumalini. So subsidiary usil limited. So i-value yakhona 100,000. Guys, our assumption here is because ayikho information esitshelayo ukuthi usil limited uke wa-issue amanye ama-shares. So sizo-assume ukuthi i-value yabo i-capital ilokhu imi 100,000 akazishintshe akazinyuki. So that will be our assumption here. So kusho ukuthi at acquisition ukuthi the time ithengwa vele le company ngaleya date okumhla ka-1 July 2023 i-value yale capital ye company bi 100,000. So sizothatha the 100,000. Then yiphi enye equity account esinayo retained earnings. No retained. Ukhumbule yonke into esiyenza lana siyenza at acquisition. So i-balance ka-retained earnings at acquisition le balance sheet esinikezwe lana eyangomhla ka-30 June, that is after acquisition. So kusho ukuthi ngamanye amazwi awukwazi ukuthi uthi leya 16,000 yona retained earnings at acquisition, no. So nakho lapha kwi-statement of changes in equity ngize ngabhala ukuthi i-opening balance ibingomhla ka-1 July 2023 obekuyiyona acquisition date leya. Kusho ukuthi at acquisition the equity the retained earnings ka-sale limited ngaleso sikhathi i-value yakhona ibisathi 10,000. So u-6,624 i-value ya-retained earnings ebe accumulated after acquisition. So thina now i-continuator yakabi ngezinto ezenzakale after acquisition. Sizafuna ukudetermine ukuthi at that date ethengwe ngayo ibiwetha how much. So sizobuka i-capital at that date, sibuke i-balance ka-retained earnings at that date of acquisition. So at the date of acquisition, the retained earnings balance ibikade imalini ibu 10,000. So sizoba no 10,000. So 10,000. Then sinama column ayithula ngaphansi kuka Pelican Limited parent. sino at sibe no seed. So u-at la sifaka si-allocate portion yama-balances ebesinawo at acquisition. Then kulikhuluma kasithi sifaka ama-balances enzakale after acquisition. So njengamanje asakafiki kusense because sisabuka ama-balances ebesinawo at the date of acquisition. So now lama total esiba nawo la sibe sesiwa-allocate ke according to i-ownership percentage. So since uPelican on 100%, kusho ukuthi uma sithi 100,000 times 100% kuzobuya yena 100,000. So yona value your capital ebesinayo at acquisition. So kusho ukuthi lapha NCI asize uku-allocate lutho sofaka uningi because there is nothing that is owned by other outside parties. So if mhlambe lana let's say i-example lengiyenzayo, let's say laba bebe-owner u-80% and u-NCI owner 20%. Then le total 100,000 besizoyisplita bese 100,000 times u-80%, u-80% kube yiwona usufaka ngaphansi kuka-parent, then u-20% bese u-allocate to u-NCI. But this is not here akusiyona case esidila nayo because Still Limited is wholly owned. So kusho ukuthi the full capital of 100,000 will be allocated ngaphansi kuka-parent because there is nothing that is owned by NCI, non-controlling interest. So same thing esizoyenza nabo retained earnings, 10,000 times 100%, u-10,000 uzoza laphaya, which means there is nothing to be allocated to NCI. Now, uma sesinayo-ke i-equity yethu, sesi-add ama-totals, khona sizothola lento esiyibiza ngo-net asset value. This is our NAV. So, mingamlela lesiyibiza nge-NAV. So, i-NAV yona esitshelayo ukuthi i-company at acquisition ibe worth how much. So, i-NAV yethu kuzoba 110,000. So, this is the total, 110,000. So, laphayana sinonil. So guys, uma sesinayo i-NAV, sekumele si-check-ke ukuthi the consideration paid by uparent ukuthi uPelican u-investe how much, bakhokhe how much for uStill Limited, so that sizokhona ukuthola ukuthi ngabe sine-goodwill noma sine-bargain purchase. So now sizoba ne-consideration paid by uparent. So uparent ukhokhe malini la. So how much was invested by uStill was invested by uPelican uStill Limited. So now your investment. So uPelican invested 120, that's 120 yona consideration le. So yona amount ekhokhiwe ikhokhwa uPelican ekhokhela uStill ngoku-invest again 120,000. So sesiyazi ukuthi these people they paid 120. So now lento usuyakhona ukuyenza ukuthi ixoxe ikhulu. So my okay ngiqondanise la. So lento uma uyikhulumisa ithini indaba yayo. Angi-highlight sesiyitholile i-net asset value at acquisition ukuthi at the date of acquisition uStill Limited ngokwe-equity yakhe uveza ukuthi le company beyikade iwetha 110,000, but uPelican determines the investor they paid how much, they paid 120. So i-company beyiwetha less but i-investor yakhokha more. Lokho kusho ukuthini? The excess amount abayikhokhile bese bekhokhela the reputation of a company. You're going to ask ukuthi if uthenga noma investor kwi-company that is having a good name, that is having a good reputation, you pay a price for that. So kusho ukuthi ngenxa yokuthi laba ba-end up bekhokha imali e-modern le company boyeta yona, the excess or the difference bese bekhokhela ini, the goodwill. So that is the reputation of the company bese beyikhokhela lapho ukuthi they are investing in a company in a reputation right. So the difference between the net value and the net asset value and the consideration paid kusuke kuyini, kuyi-goodwill. You still following?
Yes.
All
Yes,
right.
second.
Okay. So mansala ningasabi ukusho. So kusho ukuthi goodwill lana izoba how much? 120 minus 110 sizoba ne-goodwill ye 10,000. So the 10,000 is the goodwill, and the goodwill siyifaka kwi-balance sheet and ingena ngaphansi kuka-net, ingena ngaphansi kuka-non-current assets. So guys, if kwenzakalile mhlambe angithi uyabona la, so angibhale kanje lento le khona sizoyichaza. If i-NAV yakho, if net asset value per share greater than i-consideration or i-consideration to investment le, so if greater than consideration paid kusho ukuthi lapho sinani. So if i-NAV greater than i-consideration lapho sizoba ne-bargain purchase. But if net asset value less than, the net asset value 110 less than the consideration. So if NAV less than the consideration, then sinani sine goodwill. So if the NAV is less than the consideration, we have goodwill. And notice which is goodwill, yongena with statement of financial position ngaphansi non-current asset. So same thing now, if I can purchase uzongena kuyo statement of financial position. So what I need is over negatively yeah. So yona analysis yethu ke lese siqedile analysis. Then silandela ama steps njani? Yes.
Ulubuza i-bargain purchase under i-statement of financial position ingena kuma NCA nayo.
Yes, uzoyingena uzoyifaka ama non-current assets but uyifake kuma brackets because i-negative balance. Yes. All right. Then sesiqedile, this is step 1. But guys, okwamanje ngisasisaphinda lapha. So amanye ama-question azodinga ukuthi i-analysis yethu ibe extended. So le question esenza manje igcina la because we are still building up. So ukuze sikhona ukucover izinto eningi, so ukwenza different activities, because each and activity introduces something new, so that ulwazi lakho lizo-accumulate. So ziningi izinto ey'coverwayo under this topic. So okunye soku-add ngokwama-activities, all activity focusa la, because kuzokwenza amanye ama-activities uzotshelwa kuthiwa mhlawumbe i-consideration yakho it's in a form of ama-assets plus cash. So but akwenza imehluko. So if kuthiwa uPelican uinveste, if uPelican uinveste nge-vehicle, uphethe nge-vehicle ewetha 80,000 plus ucash ka 40,000. Akusho lutho lokho, it doesn't matter. Thina sibuka i-total ukuthi okay, unakhuza bazokutela kwi-question ukuthi i-vehicle is part of i-consideration paid by uparent ukuze abe ne-ownership ku-subsidiary. Then on top of that asset abayinikezile base befaka no-cash ka 40,000. So wena uzobuka nje that total ukuthi isiyonke i-total yale consideration, because imoto iwetha 80,000 ucash 40,000 ubani 120. So still nalapha consideration uzofaka i-total 120, even kuthiwa lo 120 wakhiwa i-assets no cash, it doesn't matter. Niyayizwa lento engishoyo?
Yeah.
Okay. So now this is a step 2. So with step 2 sitini, we prepare pro forma journal entries. So now ngidinga attention yakho ke la. So if sesenza the pro forma journal entries, the first entry esiyenzayo i-entry yoku-eliminator i-equity ka-subsidiary. So the first, so number 1 entry, we eliminate the equity of subsidiary, or umuthanda futhi la siyasho ukuthi elimination of investment la. So we eliminate the investment. So uzokhumbula lapha kulama steps engikunikeze wona la, much in principle engikunikeze wona igcineni lapha sino elimination. So eliminate carrying amount of the parent's investment in the subsidiary. So yona pro forma entries of khombisa ukuthi how do we eliminate investment ka how do we eliminate investment ka parent to subsidiary. So siyenza kule entry of elimination le. So now, if we see eliminator equity, so guys, sizokwenza ama-journal entries la. So masenza ama-journal entries, obvious, you indicate which account is debited and which account is credited. So now, if it's eliminator equity, so guys, you eliminate equity, that subsidiary at acquisition. So mhlawumbe angikuveze lokho. So at acquisition. All right. So if we eliminate equity in a credit, no, in a debit balance. So my equity accounts increase on which side? On the debit or on the credit side? My equity accounts.
Credit side.
Credit
side.
So yes, good. My equity accounts are increased on the credit side. So now, Oma CTCI eliminate equity, which we reverse or we cancel. So we should if our equity increase on the credit side. If you see eliminator, see credit and see debit.
See debit.
Say debit code. So the first pro forma entry is you eliminate the equity of subsidiary. It's acquisition. So in my equity account, they see now it's acquisition for subsidiary. They see the share capital, no retained earnings. So these equity accounts must be eliminated. So must eliminator, see our debit. So you're gonna debit share capital. You debit share capital. So share capital affects the statement of financial position. It affects before we balance sheet so transfer, but share capital is we come over from the statement of changes in equity, SOCE. And then again we debit to retained earnings because we are eliminating equity now. So now we come over from the statement of changes in equity. So our balances are corner, the map here application. So in our balance already see now we analysis 100,000 and 10,000. Now umbuzo uthi which account is credited? Guys, the investment in is this an asset or liability or equity?
Asset.
The investment is assets. And it is telling we eliminate. So we said we eliminate the carrying amount of the parent's investment. So investment nansi lapha yasiza question. So now abantu yabona ukuthi ingaphathi kwama assets non-current assets investment eyenziwe Pelican still limited ka-120. So that investment must be eliminated. So investment is an asset. So if you eliminate the asset, you're gonna credit your assets. So you credit the investment. You credit the investment. Investment affects the statement of financial position. So how much was the investment? Parent
120,000.
120,000. Now, is our debit equal to credit side?
No.
Our lingana side and it's lip side short.
Debit side.
What debit side?
The shorting on my lane.
10,000.
10,000.
What about 10,000?
She's a goodwill.
Goodwill, very good. Goodwill in gosh.
It's an asset.
It's an asset.
I'm asset increase alabani. What debit side?
On the
Isn't it?
debit side.
So you debit the goodwill. So good. You debit the goodwill, which will affect the statement of financial position. So our goodwill is 10,000. So it's a penalty again. Guys, this is the standard entry. So more eliminate equity or eliminate investment. This is the entry in that. So we eliminate equity. Equity accounts, the subsidiary, we eliminate investment in zero parent, and we recognize the goodwill of 10,000. So obviously debit assets is recognized because some assets are increased on the debit side. Or we should say with balance sheet, we must show this 10,000 because we've recognized this 10,000 goodwill. Am I making sense?
It makes sense, yeah. It makes sense.
Yes.
All right. This is the general or the standard pro forma entry. So amanye ayahlukahlukana ukuthi ngokuthi imaphi ama intra-group transactions owanikezi. So asale seswenza wonke because sike sakhuluma ngawo. Uyakhumbula ngithi ukuthi sinaleya issue ka 10,000 uyakhumbula ngithi. I-loan ileka 10,000. So le loan is i-loan isuka ku Pelican iza ku Seal. So since the transaction enzakala kuma companies akwi group, all transactions enzakala kuma companies akwi group must be eliminated. Now uma si eliminate ke lento ye loan isothini. Now check ke. Angithi sino ngicela uku-eraser la. Everything. Khona sizoyibona kahle ezinye i-highlight. So angithi uyabona ukuthi lana sinama liabilities, non-current liabilities. So sine liability ewubani ewu-loan from Pelican. So this liability is 10,000. So sesiyazi ukuthi le liability le kumele senze njani? Kumele si-eliminate. So uma si-eliminate liability sizoyenze njani? Sizoyi-debit noma sizoyi-credit? When we eliminate liability.
Debit.
So le liability yethu siyibiza ngobani? U-loan from Pelican Limited. So kusho ukuthi entry yethu la sizothi debit the liability account oku-loan from Pelican Limited. So this is a liability. So my liabilities affect the statement of financial position. And then which account are we gonna credit? So you can say credit as an asset la. The asset here too, it will loan to Seal Limited, 10,000. So the asset must be eliminated, say debit and say credit. When we eliminate the assets, loan to Seal.
Say debit, say credit.
Good. So we credit the asset, which is loan to Seal Limited. So we asset left. So ngoba si credit nje siyayi recognize the asset. So I'm asset affected the statement of financial position. So 10,000 and 10,000. Sibambile.
Sibambile.
Yeah,
Yes,
siyibona mina.
If
Ngazi
kuthiwa
reference sami but akuveli la ubhala type khona.
kusho ukuthi khona la uthinte khona-ke so vele uphume uphinde ubuye uzobe sesivela iscreen. Laba abanye basasibona ngithi screen.
Oh, so right.
Yeah, siyibona.
Okay, good. So uma kuthiwa narrations are required uzowabhala laphayana. So i-narration yakho izothini? Elimination of intra-group loans. So asibhali just but isikhathi esiningi bazothi ignore noma bazothi narrations are not required, only journal entries abasuke bewafuna. But if bethi bayawafuna ama-narration kulula guys ukunarrate. Uma unarrate usuke usitshela ukuthi le entry oyenzayo yini kwenzakalani. So this is narration izothini? Elimination elimination of intra-group loan. Then sewuqedile. So i-narration yalaphayana if ibifuneka bese eliminate laphaya. So obviously yona sibhale laphana elimination of equity of sale limited subsidiary company or mutani washo elimination of investment because investment is recognized. So kulula nje ukunarrate. Okay, siphinde futhi sibe ne-issue ka-interest. I-interest ka-500 no 500. So labo unakhoza angisho yakhumbula ukuthi usile ubebeleke i-loan. So umeboleke umethatha i-loan umele akhokhe interest. So kusho ukuthi le interest ebikhokhwa usil. So the time ukhokhe interest expense lo interest oyikhokhayo. And then u500 i-interest receiver upelican from usil. So the time they receive interest kusho ukuthi interest income. So siyazi ukuthi lama interest kumele siwa recognize because enzakala within that group. So kumele siwa eliminate, siwa recognize. So sizokwenza njani ke? So angithi asitale ngalo 500. Lo 500 i-interest received by upelican from usil. So i-interest receive income. So must eliminate ama income so siyawa debit or siyawa credit. Income.
Yeah, credit.
Income angithi increase kwa credit side. So if we eliminate ukuthi kumele uyi debit.
Debit.
Yes, so we debit income yethu oku interest received. So interest received, this is an income account. So our income affects the statement of profit or loss. And then the account is credit la kuzoba interest expense. So interest, that is interest paid. So interest paid by usil to upelican. So that is interest expense. So finance cost below we expense. So my expenses are increased about debit side. So I must recognize the expense, recognize what is saying, see credit. So my expenses affect the statement of profit or loss. So the interest malini 500. 500. Okay, so eyokugcina elimination esiyenzayo nansi yalaphaya interest not interest, rent expense paid. So nansi la no rent expense paid to sale limited. Irent kamalini ka 15,000. So upelican ukhokhile irent ka 15,000. Okusho ukuthi ngamanye amazwi usil ureceiveile irent. Angithi yabona lapha sino rent income. No rent income ungaphansi kwasil 22,000. So kusho ukuthi kulo 22,000 u15,000 usila ureceive kulo 22,000 ureceive usil limited u15,000 uqhamuka from upelican. So since kune rent eqhamuka from upelican or parent kumele sithi recognize leyo rent le. So irent esogcine se recognize kuzoba malini 7,000 oqhamuka outside. So later that 15,000 because it comes from within the group, we must eliminate that 15,000. So kusho ukuthi kusi limited the 15,000 income and go pelican expense rent expense go pelican. So how do we recognize le iyafana nale spread against? So must recognize lana sizodebita income or rent received. So rent received by what ungaba specific kusho ukuthi uba receive. So the rent was received by usil la. So rent received income and my income affected the statement of profit or loss. Then so you recognize the expense. So how you recognize expense, you credit. That is rent expense. So that is rent paid. Rent expense. So rent paid by Pelican Ekokelusil. So the rent expense. So my expenses are affected the SOPS, statement of profit or loss. So in my lane, their rent 15,000. So guys, once when the journal entries, I get sewuqedile 15,000. So ngisho ukuthi siqedile ngobani ngo-step 2. So sesiya ku-step 3 na-ke now. So step 3, begin to consolidate your statements. Now sesiyaqala-ke si-consolidate ama-financial statements. Guys, vela back ku-presentation IAS 2, presentation of financial statements. So uma sipresenta, you first write the name of the group. So lana still in a company, guys. So ngiyakhumbula ukuthi kudala sadila nama-individual companies. Uma wenza ama-financial statement, wawuqala ubhale the name of the company, then bese ubhala the name of the statement osiprepare. So lana asiyenzi i-statement se-company, but senza i-statement se-group because we are consolidating for e-group. So you write the name of the group. So igama lale group kuzoba. So guys, the group is named after the parent. So kusho ukuthi igama lale group kuzoba ubani, the parent is Pelican. So this is Pelican Limited Group. So this is Pelican Limited Group. Then which statement are we preparing? So we are consolidating. So this is the consolidated statement of profits or loss and other comprehensive income for the year ended. And we have so check out a question. So we have 30 June 20x4. So 30 June 20x4. So scala income statement. So income statement yethu ayinabo ama-sales or cost of sales asinakho lokho. So sisebenza lokho esikunikeze. So income statement yethu iqala from gross profit. So nathi soqala gross profit. So mas consolidator uthatha gross profit, uyihlanganisa ne-gross profit, i-gross profit ka-parent, uyihlanganisa ne-gross profit ka-subsidiary. So in this case u-subsidiary akana gross profit. So sizothi sinika mas consolidator na. So gross profits. So gross profits start at 80,000. So in bracket, P. We indicate that this is for the parent plus U0 is for subsidiary S. So if you subsidiary, when the gross profit is 30, then also 80 plus 30. So U0, so U0. Then it's totally a corner. It's needed Zabani 80,000. Then it's Kobege, income statement, it's in rent income. The rent income, U0, parent, subsidiary, 22,000. So rent income U0 parent plus 22,000 subsidiary. So when lama bracket or S no P out ngibafaka mina ngibafaka cause ngenzela wena ukuthi ukhombole uma sewuyifundela ukuthi oh lo 80,000 awe parent lo 0 bekuyi gross profit ye subsidiary ngenzela wena but uma sobhala asikho isidingo sokuveza labo P no S. Siyathola 22.
Yes.
22,000. Then siqhubeke. So masiqhubeka ngithi yakhumbula ukuthi u500 lower interest so eliminated. Into eliminated ayisabuyeli kuma statements wakho. So asisalo lokho ngoba sike eliminated nje sekufile lokho akusangena. Then sibe no other expenses. No other expenses. Other expenses. So other expenses wethu umi kanjani. So other expenses U0 ku parent u12,000 ku subsidiary. So it is 0. So OS no P angisabafaka because usuyayibona logic yakho ukuthi khamba kanjani sithi parent plus subsidiary. So 0 plus 12,000. So 0 plus 12,000. Yes, buza sisi.
Angithi ku rent income ngesikhathi senzile bese minus 15,000 indaba sibuyisela 20,000 singabuyisela 7,000.
Very good. Ukuba seklasini ngabe ngithi abakushayela izandla. So ngiyabonga sesenze mistake. Angithi yakhumbula ukuthi sithe ku lower rent income included in that 22,000 is 15,000 oqhamuka ku Pelican of which sesu eliminated. So lo 15,000 so eliminated ngiyabonga sisi wasilungisa. So lapha kumele sithi minus 15,000. So nansi le interest yenzile lapha ya. So rent received or rent income simdebitini masimdebita siya minus lapha ya u 15,000. Thank you very much. So now kusho ukuthi balance sizoyirecognize ke rent eqhamuka outside the group. So u15,000 to minus because uqhamuka within the group. So thina irent esijabulelayo ile esi-realize outside the group. So 22 minus 15 kusala malini?
7,000.
Thank you, 7,000. So 7,000 yona rent eqhamuke outside okuyona esijabulelayo, not 15,000 oqhamuka within the group. Thank you very much. Okay, siqhubekeni. Sesiqedile ngo rent sibe no property. Kwenzakalani la? So other expenses lapha. So other expenses wethu kwakhiwa property expenses or property expenses. Okay. So asenze kanje. Asilistele wona one by one ama other expenses wethu. So ngaphansi kuka other expenses sino property. So ukuthi i-subheading le other expenses. So other expenses wakhiwa property expenses. So property expenses sell 0 plus 12. Lokho kugcine kusinikeza 12,000. So my expenses noma nje vele siwafake kuma brackets kusa early singaze silibale because siyawa minus ama expenses outflow. And then another expense esinayo ile yaka selling. Okay, ngireze khona kuzobonakala kahle. So sesimfakile property expenses la 12. Sino selling and administration expenses. So selling and admin. So any expenses nayo selling and admin expenses. So ama figures ka selling and admin athini is 25 and nil. So 25,000 plus 0. So lokho okusinikeza 25,000. Another expense esinayo rent expense angishakhuluma lo rent expense ka 15,000 sesim eliminated. So asisambuyisi ingakho siminusile njengoba is correct nje usisi lapha ya 15,000 siminusile lapha ya. So ngoba siminusile sakwazi ukuthi siphinde simbuyise as expense because sim eliminated lo 15,000. So siyameqa size ku depreciation of furniture. So depreciation on furniture. So athini ama balances wethu at depreciation. So depreciation 600 plus 200. So it's 600 plus 200 okusinikeza 800. So this gives us 800. And then any expense esinayo ile ya ka audit fees. So audits. So audit fees it's 400 plus 100. Then interest on loans eliminated lo 500 says ukubuyisa. So 400 plus 100 audit fees. Kusinika the total ka 500. Okay, so asibuyisi interest on loan ka 500 ngoba si eliminated. So now angishayela i-calculator sithole the profits before tax. So profits before tax, how much? So it's 80,000 plus 7,000 minus 12 minus 25 minus 800 minus 500. Kumaba.
48,700.
40?
48,700.
Oh, 48,700. So guess I'm told 48,700 profits before tax.
Yes, 10.
Okay, then we must see the profits before tax. Segment C minus the income tax expense. Income tax expense. So income tax expense. So now Lanama expense available calculated for individual companies. So 11,060 for parent and subsidiary 25,76. So 11,060 plus 25,76. So what's nigga banigi total lapha ya?
$18,636.
636. Then sesiyakhona-ke ukuthi sithole i-profits for the year. Profits for the year. So profits for the year, 48,700 minus 18,636.
35,064.
35 and 64. Then sibe no other comprehensive income. So other comprehensive income. So now income statement as now. So 0, no 0. So other comprehensive income 0 plus 0. So 0 no. Then I'm telling total comprehensive income. Total comprehensive income. So total comprehensive income goes about 35,064. Then as criteria, I paid the income statement yet. So sales what determine again, we would see yes, profits attributable to. So profits attributable to number 1, owners of the parent, and I think profit or NCI profit split. Because NCI ngabanye abantu aba invested nabo ku subsidiary, so nabo basuke bene share of the profit. So and ingakanani profit eya ku non controlling interest. So la ngoba sinayo non controlling interest, kusho ukuthi yonke le profit obvious iya kubani, iya kuma owners of the parent, because USIL Limited is wholly owned by Pelican. So all the profits is attributable to owners of the parent. So la ku NCI sizoba no nil, because there is no allocation near NCI because we do not have NCI. So if you see now NCI uzongikhombisa because we're gonna do ama cases ahlukahlukene. So after this case kumele senze whereby sisimo NCI khona uzobona uku-allocate kwe profit ukuthi we allocate kanjani profit ya ku NCI, and into ezosiza lapho yini i-analysis. Siyamsana.
Yes.
Then isiphelile-ke i-income statement yethu sesiconsolidate-ile. So iyona income statement ye-group-ke manje le. So ye-group ngoba isihlanganisa both companies akwi-group, so sesicombine isiconsolidate. Any questions now? Singasabi ukubuza, akekho ozosithethisa. So uma singabuza usho ukuthi icacile, asiqhubekeni-ke. Senza now the statement of changes in equity. So again, we present the name of the group, Pelican Limited Group. This is a call that each group is named after a parent. So if you come a parent here called XYZ Limited, then you come a group of XYZ Limited Group. So so we are preparing the mention and looking the statement of changes, but this is the consolidated statement of profits or loss. Statement of changes in equity. So my mind is not here now. So statement of changes in equity. So guys, uma senza statement of changes in equity, number 1 into areas. Asifaki, angithi yakhumbula ukuthi i-equity ya subsidiary eliminate marginal entries, siyakhumbula ngithi lokho. So
Yes,
the equity of subsidiary, we have eliminated equity. So once eliminated, it does not exist. So now the only equity scenario is equity kabani ka parent. So now we have eliminated the equity ka subsidiary. So uma sewenza statement of changes in equity, sibuka nje kuphela uparent. So ku statement of changes in equity ayisebenzi lento yokuthi uzothi i-capital ka parent plus i-capital ka subsidiary. No, because i-subsidiary sesim eliminate equity yakhona. So the only equity esesele nayo we group equity ka parent. So master the statement of changes in equity, you only focus on parent. You only take balances are applicable to parent. Then equity account is now lana share capital. Share capital ganye no retained. Retained earnings. Then sibene total. Uma sino NTI siyayifaka bane column ka NTI but uma sinayila angizokubhodarisha ngayo kwamanje. So when uma send the question whereby the company is not wholly owned sesino NCI. So if sends this statement of changes kala ngama opening balance. So opening balance. From opening balance la khona kuqala khona unyaka. So lo nyaka uqala ngomhla 1 July 20x3. So la unyaka uqala khona ngoba uphela ngoJune 20x4. So now equity parent iwumalini. So check out balance sheet nange yaw equity. So equity soyifaka la equity kamalini soyithatha. Sikhulume 200,000. So sithathe ka parent. So now uma senza changes in equity awusasho ukuthi parent plus subsidiary. So we change statement of changes awukwenzi lokho. We statement of changes you only focus on balances ka parent because we have eliminated the equity the subsidiary. So now kusho ukuthi less iyafana i-closing balance kahle kahle but ngithi ayikho into esitshelayo ukuthi kube kwaba khona ama shares adayiswe during the year. Kusho ukuthi we are assuming ukuthi not what we are assuming siyazi ukuthi there were no changes with capital structure. So if ingabanga nama changes with capital structure the opening balance is ofana ne-closing balance because awekho ama shares amasha adayiswe parent. So kusho ukuthi 200 uzoba the opening uphinde ube closing 200,000. Then opening balance ka retained earnings. So retained earnings closing balance layer. So thina sifuna opening balance. So opening balance is giving a zero statement of changes in equity. So how much is the opening balance?
40,000.
40,000 retained earnings nange 40,000. So asim add na lower because eliminate ile lo 10,000. So it's 40,000. Which would total year 2 is 240,000. Okay. And after opening balance, this is all money profits. Profits attributable to owners. Profit attributable to owners of a parent. So profit here retained earnings. So how much profit is attributable to owners of the parent?
35.
So tatale, lewe tatala usuke because angithi once aba no NCI le profit once aba no NCI angicacise kusa once kwawukuthi sinayo NCI le profit izobe ingafani nale lapha ya because le profit elana isuke kune portion attributable to NCI kune portion attributable to parent. So we see split le profit if sino NCI. So when you always take the profit attributable to parent, not the profit for the yearly income statement. So singayenzi leyo mistake. So ngizophinde emphasize when sesenza activity sesino NCI. All right. So profit attributable to owners is 35 and 64. So show to the profits is all up here. Then just again, I'm a closing balance. Because after now, my dividend. If there's no dividend, I call qua parent. Ungakhohlwa ukuthi dividend njalo reduce retained earnings, dividend paid. So if it's not dividend paid, we are getting assessment of changes. We reduce us in minus under retained earnings. So as now, my dividend I call parent. So this is about the closing balance. Closing balance, we have 30 June 20x4. So closing balance is over 200,000. And then closing balance is over 4 plus 3 or 7, 0 plus 5, 0, 6, 4. So we should see total is about 275,064. Then sesisiqedile statement of change in equity. See, understand it?
Yes.
All right. Then sesenza the last statement, balance sheet, consolidated statement of financial position. Consolidated statement of financial position. It's 30 June 20x4. So guys, it says the balance sheet is color my assets. Disclose my assets. So it's no assets section. So apart from my assets, see non current assets. Then non-current assets to it's what you are property, plant, and equipment. Property, plant, and equipment. So apart from property, plant, and equipment is further my assets to it. So if it's no land or building or vehicles, won't get all my assets now. So now I can apply a scenario. Land at cost. Land parent, land subsidiary. So 35 plus 110. So 35 plus 110,000. Then siphinde sibe nani ne-furniture. So i-furniture le u-4.2 i-carrying value nalo 1.4 ama-carrying value la because isithatha i-cost is minus i-accumulated. So mawuthi 6,000 minus 1.8 iphuma 4.2. So shuthi already sekuyi-carrying value le. Nalawo muthi 2,000 minus 600 iphuma 1.4. So vele sithatha ama-carrying values. So 4.2 plus 1.4. 4.2 plus 1.4. So sithola malini-ke i-total assets which non-property, plant and equipment. PPE
600.
kuphuma singasabi ukuyibisa
Uma 150,600.
150 600. Okay, so angikakhumbula ngitheni kwena ngithe ngaphansi kwama-assets kuka non-current assets uyakhumbula si-recognize i-goodwill that is eliminate equity ne-investment sibese si-recognize i-goodwill ka-10,000 nakho basithe goodwill must be debited i-asset. So when you debit i-asset uyayi-recognize. So i-investment le ka-120 awusayifaki kwi-balance sheet because lowa 120
Eliminated.
yes sesiwu-eliminateile lowa investment awusawubuyisi-ke kwi-balance sheet ye-group. So I'm happy ukuthi lezi zinto siyakhona ukuyilandelela. So into esiyi-recognize kuphela la kuzoba i-goodwill. So goodwill. So i-goodwill yethu 10,000. So now asitholeni i-total. So i-total kodwa futhi noma asiwadinga ama-total so ishaya
600.
okay noma asiwashaye isikole singathi sichithe icala. So kusho ukuthi i-total ka-non-current asset yethu kuzoba 160 ongibizela yena 600. Okay. So i-total yethu le size kwi-section elandelayo. So i-section elandelayo i-section ka-current assets. So ma-current assets siba nezinto eziwu-3 usually siba ne-inventory, sibe no receivables, account receivables or trade receivables, sibe no cash equivalent. Izona zinto esijwayele ukuba nazo lezi ngaphansi kuka-current assets. Okay, so check-ke i-inventory siyacombine nala because siya-consolidator. So inventory u-80,000 no 0. So inventory 80,000 plus 0. So i-total is about 80,000. Size receivables. So receivables, account receivables 80 plus 3.6. 80,000 plus 3.6. So lokhu kuzosinikeza u-33,600. 33,600. And the last one, cash equivalent 2,300 plus 20,000. 2,300 plus 20,000. So we totally go 40,300. 40,300. Then I want to let total esizoyifaka lapha i-total ka-current assets izokuba 80 plus 33,600 plus 4,300 iphuma uba i-total ka-current assets
153,900.
153,900. So i-total le ka-current assets. So sesiyakhona ukuthola u-total assets ngokuthi sicombine non-current and current. So laba boyi-2 siyaba-add khona bezosikhiphela lo ozongena la oku-total assets. Total assets. So total assets, how much are you getting?
14,500.
314,500. Then sesiqedile ngesection yokuqala kwi-balance sheets. See happy?
Yes.
Right. Then this is over the last section of the balance sheet, or we section equity and liabilities. Equity and liabilities. So masenza la siqala ngesection ka equity. So equity already sesiyazi ukuthi wakhiwa u-share capital. Kanye no retained. And guys sekulula ngoba simenzile u-statement of changes in equity. Retained earnings. And angiyakhumbula ukuthi la ku-share capital no retained earnings lama equity sesibuka nje kuphela ama equity ka-parent because we have eliminated i-equity ka-subsidiary. So uza ku-statement of changes nasi senzela i-closing balance. So i-balance sheet isifaka ama-closing balance. The closing balance ya-share capital is 200,000 and retained earnings 75,064. So ibona ama-balance esizowafaka la kwi-statement sethu. So share capital is 200,000 and then retained earnings 75 and 64. So total equity is in 275,064. So this is the total equity. And then see ma'am, liabilities, section of liabilities esesizoyenza. So liabilities now we're going to current and non-current. Non-current liabilities. So ngaphansi kwa non-current liabilities sinobani. So ngaphansi kwa non-current liabilities sino loan from Pelican at 10,000 and we eliminated the loan at 10,000. So as is. So sino loan from Pelican. A loan from Pelican and loan when they have 15,000, so eliminator of 15,000. So I take on loan balance now. So as now your loan come outside the group, so it's no need that higher. And then see the next section yama current liabilities. Current liabilities. So current liabilities is about payables. Payables nine account payables 31,060 plus 8376. 31,060 plus 8376. So it's in the total year to la. Total
39,436.
436.
Yes.
Okay, then says you're gonna total equity and liabilities. So total equity and liabilities uzoba imali. So ukuze uthole total equity and liabilities, angithi sifike sithatha total equity, si-add non-current, si-add current liabilities. Sithola by total
31,000, 314,500.
314,500. Balance, right? 314,500. So now siyabona ukuthi balance. So assets wethu 314,500, total equity and liabilities 314. So once walandela ama-principles lawo consolidate, eliminate, ngeke ibalance sheet yakho. So kubalulekile ukuthi ustick kuma-principles, uzazi izinto eliminatwayo nezinto enga-eliminate. So khona i-question esinayo regarding le balance sheet noma iyakhanya. Iyabonakala. So kusho ukuthi now uma sesiqhubeka la sesongena kwi-session whereby sesiconsiderisha oma NCI. Singene kwi-case la khona uthola ukuthi ama-companies adayiselana ama-inventory noma adayiselana ama-asset, so that sizogxila kwi-concept ka-unrealized profit. So once we understand-ke lapho izobe singasekho i-question ezokuduzula la.